Is it time to buy Tesla, Amazon, Apple? Are they likely to go higher? I will show you how to analyze those stocks and really any stock in just 10 seconds. Plus, we'll look at the overall markets to figure out if the market is set to crash lower or if we are reversing. And then finally, I'll show you how to day trade a stock like Tesla using Friday's pretty volatile action. That's all coming up. All right, so how do you know if a stock is worth buying? Obviously, big name companies like Tesla, Amazon, and Apple have gone down a lot this year, and many are thinking that maybe they're at bargain prices. Well, it's only a bargain if they're going to go up after you buy it. If they're likely to go lower, then it's best to wait. And it's actually not that hard to figure out what the probabilities of either thing happening are. If you can look at a chart, and again, you can go to my website, stockscores.com. Charts are free. Punch in the symbol. So for Tesla, the symbol is TSLA. Punch in that symbol. We're going to do that together in just a moment. And then look to see who is in control of the market. That's always the first question I want to ask. Are the buyers in control or are the sellers in control? To answer that question, very simple, if the bottoms are falling, if the tops are falling, that is a sign that the sellers are in control. If the bottoms are rising, that means the buyers are in control. And you only ever want to trade with the side of the market that is in control. So let's jump over to Stockscores now. I've got the chart of Tesla open here. And let's just think about what I mean by tops and bottoms. So this would be a top, this would be a top, this would be a top, and you can see that they're falling over time. The bottoms, this is a bottom, this is a bottom, this is a bottom. So they were also falling. More recently, we may have a rising bottom here, and it's also worth noting that we've hit this low point a number of times. So we call that support, and we can draw a line across it, and that becomes a floor that the market has held in the past. And what that essentially means is that the market believes that the company's fundamentals aren't worth less than that floor based on all of the information that the market has about this particular stock. So in this case, it's around $210, $205 a share. However, there's really no rising bottoms yet, nor have we really broken a downward trend line from a rising bottom. There we broke a downward trend line, but the bottom was lower than the previous one, so that's not good enough. If we go back over to this side of the chart, notice here we broke a downward trend line from a rising bottom. So when that happened right there, that was a signal to consider buying the stock, and you can see that over the next 5 weeks it went up. Then it switched to a falling top and it broke through a floor, and that ultimately sent the stock lower. So it's really simple to do this, and it doesn't take long. So let's do Amazon together. We should be able to figure this out very quickly, 10 seconds or less. All right, so there's Amazon. Who's in control? Sellers. I don't want to touch it. Now, another way to help you do this is look at the stock score. If the sentiment stock score is below 60, it's probably a stock that is in the control of the sellers. You can see here on Amazon, the sentiment stock score is 40. We've got falling tops, and we don't have any rising bottoms, and we've recently broken down through a floor. So this is a stock that right now you should avoid. Let's do Apple, AAPL, AAPL. It was looking better, so it broke a downward trend line, no rising bottom. The stock went up for a few days, and then it rolled over and has reapproached the lows. Now notice that it bounced off of that low point at 135 on Friday. So that's a good thing. Now here is where you can look at a different chart depending on the style of trading you want to do. I've been showing you the daily chart. That's for what we call a position trader. But let's say you're a day trader or a swing trader, someone who is much shorter term. Well, if I'm a swing trader, I'd be looking at the 13 or 15 minute chart. So I can switch my chart time frame. I can go 15 day, 13 minute or 15 minute, and there I can see that the sellers are still in control. we've had falling tops. However, at the end of the day on Friday, we broke this steep downward trend line. And remember, on the daily chart, we were hitting that floor that's held up for some time. So there's some potential for Apple to go higher, not conclusively so yet because we don't yet have rising bottoms. We need those rising bottoms first. The stock is oversold because it is far below this trend line. And so it's likely that in the short term, it'll make a little bounce back, but it's still not really a stock to buy. So in answer to the question, should you buy any of those stocks, Amazon, Apple, or Tesla? To me, the answer is no. However, that can change in 2 days. You just keep looking at the charts, see who's switching control, and look at the chart of the time frame that suits your style of trading. If you're a really long-term trader, don't look at the intraday chart, you look at the 3-year weekly chart. In the 3-year weekly, we've still got falling tops, but we're starting to see a rising bottom here in Apple. So if we can break up from this, break that downward trend line, we should then move back up toward those highs around 170. Those are all woulda, coulda, shouldas. Let's watch for those things to happen before we consider buying these stocks. All right, let's get into this week's market analysis, figure out where the overall market is going. We've had lots of volatility lately around interest rates and inflation. So let's take a look at the S&P 500 first. Symbol there is SPY. So I punch in SPY in the top left, and there is my daily chart. I'm going to jump to a 3-year weekly to get the long-term view, and you can see that the sellers are still in control. Tops are falling. Do we have rising bottoms yet? No, we don't. So we need to build a rising bottom and then break the downward trend line. Until that happens, be pretty cautious with stocks. Notice that the sentiment stock score is low right now. It's only a 33. But in the short term, that's a different picture. If I go to the short term 1 month, 60-minute chart, you can see that we had optimism up until this week. We had rising bottoms building, and we broke that early this week, and now we're more into a neutral trend. We have a little bit of falling tops in the short term. We still have rising bottoms looking out a few more weeks, but I would still be fairly cautious. So this to me is a neutral chart. The long-term chart is bearish. All right, let's do the same thing with the US small caps, IWM. And if I make this a 3-year weekly, I see that the sellers are still in control. But we have a double bottom. It's not quite a rising bottom, but we've bounced off of the same floor twice. And if we can break the downward trend line, then the small caps may start to do well. It's not there yet, but something to keep an eye on. Could happen sometime in November. How about the Canadian market, T.XIU? Let's look at the 3-year first. And on the 3-year, you can see the downward trend line is starting to be threatened, right? We're just starting to tickle through it. No rising bottom, however, so it's sort of neutral. I like that it's trying to break that downward trend line, but we haven't built the rising bottom yet. Now, if we go to a 1 month, 60-minute chart, that's a little more interesting because here we have rising bottoms. We've got a little bit of a falling top in the short term, and so the market may be building what's called a pennant pattern, but ultimately the direction of the next break is going to tell us where this market is going to go in the short term. So if we break down through, say, 2950 on XIU, more likely to go lower in the short term. If we can break up through 3010, more likely to go higher in the short term. So keep an eye on that this week. And of course, I'll revisit these things all next week. All right, let's jump to some commodities. We had a real jump in commodities on Friday. Here's USO. You can see the oil chart had falling tops, and then it switched to rising bottoms, and we broke this downward trend line for oil. That's a really important signal because we've broken a downward trend line from a rising bottom, and that's a strong sign that oil wants to go up in the near term. How about gold? GLD is the symbol, and there you can see we also broke higher on gold, but there's no rising bottom. In fact, the bottoms are falling and the tops are still falling as well. So it's encouraging because we're breaking that downward trend line, but we still need to start to build some rising bottoms before I get too optimistic on gold. Notice, sentiment stock scores 35 on gold. The stock scores will help you with this. On oil, the sentiment stock score is 63. See the difference? It's all because of the pattern shape. So when I built the stock score algorithm, I factored in the components of chart patterns to figure out what means or what makes a market optimistic or pessimistic. Rising bottoms, that's one of the components. There's others, of course. All right, how about the US dollar? US dollar has a big effect on commodities, and you can see that the US dollar went lower on Friday. However, we haven't really broken through support. We haven't broken the upward trend line yet. We are building falling tops, and so we may soon break down through this upward trend line. And if that happens, that'll be supportive for commodities, and it may also help the US stock market. All right, let's take a look at Bitcoin, GBTC. So the long-term picture, if you look at the 3-year, who's in control? Sellers, right? Tops are falling. However, when we go to the short-term chart, we see that there's starting to be some optimism building. Got a little bit of rising bottom. It's still kind of a choppy chart. I wouldn't get too excited just yet. But if we could break through this ceiling and build some more rising bottoms and then ultimately break through, we may actually have a little bit of a bounce back in Bitcoin. Now, the next thing I want to look at is TBT, which represents interest rates. And you can see that interest rates pulled back a little bit. They started to creep up again this week. But if we can build a falling top and then break that upward trend line on this chart, TBT, that would be an indication that interest rates are going to start to go lower. And again, I'm not talking about central bank interest rates. I'm talking about the rates that are actually traded in the bond market. And they tend to react to the central bank, and actually they predict what the central bank will do. So if this starts to go lower, it means the market is predicting that the US Fed and other central banks are likely not going to raise interest rates a lot going forward. All right, so that's, don't look at this chart and say that's the Fed. It's not. It's the bond market's interpretation of what the central banks will do in the future. Very important to understand that. All right, the last thing I'll take a look at is the fear chart. UVXY is a good one to look at there. And this is low again. We had crept up there a little bit through the fall as people were worried about a crash, and we did have some weakness, and now it's quite low. So that is telling us that the market is seeing some stability coming to stocks and maybe less volatility than what we've had. All right, so using all that, we can come up with some ratings then. I remain bearish on US stocks long-term, neutral short-term. Canadian stocks look a little better, neutral long-term and bullish short-term, although it's just borderline bullish. Gold, bearish long-term, neutral short-term. Oil, bullish on both time frames. US dollar, bullish still long-term, but down to neutral short-term. I've upgraded Bitcoin in the short-term to neutral. Bearish is still long-term. And interest rates remain bullish long-term, but downgraded to neutral short-term. I am seeing some signs of that market topping out a little bit. All right, let's do our day trade of the week. And this week I thought I would just pick a really actively traded stock like Tesla and show you how these principles that I've talked about in this video so far can be applied to day trading. And in this case, we're going to look at Tesla's 1-minute chart, and let's just think about who's in control. And what we want to do is trade when control changes. All right, so I'm going to draw some things on this chart. Here you can see rising bottom. By the way, this is a 1-minute chart on Tesla, okay? So rising bottoms on Tesla after a gap up in the open. But then it broke the upward trend line right there. However, it did not break it from a falling top, so I wouldn't do anything there. But here you get a line breaking, that is breaking this line from a falling top. So that is a sign that control is changing. So at that point, you can either short sell Tesla, which is selling shares that you don't own, or you can buy an in-the-money short-dated put option, which will go up if Tesla goes down. And that would be a great trade because Tesla went down sharply there. And notice this whole time it was going down, it was always making falling tops until here when it started to build rising bottoms. So you sell it short here or buy the put option and you buy it back there. The profit is the spread between the two. So if you sold it short at 220, you're covering at, what is that, 206 or so. So you made $14 a share on a $220 trade You get to leverage that 3 to 1, so you only have to put up about $73 to make $14 a share. That's a great percentage return on a very large cap, actively traded stock using simple principles that you can draw out with a ruler. In fact, I don't even use a ruler. I use my finger on my screen here. Rising bottoms, falling tops, trend lines. These are all things that I focus on in my course material at stockscores.com. You can learn more about that in the trader training section. I hope that you've enjoyed this week's video. If so, click the like button, subscribe to the channel, tell your friends, and most importantly, trade well.